Okay, meeting being recorded. All right. So I'll just quickly go over the same things that I did in the video. I said last night that I wasn't really convinced that DXY was breaking out because of a number of reasons, and one of them was definitely this upper parallel. And if you have a system, you got to adhere to it. So that's why my bias was still to the downside. We've come off a little bit. The real test will probably come, a bit lower, 97.55 to 97.50, to see if we get some follow through. All right, then euro dollar has had a hourly close above 111.40, which let me just hang on until the screen. Okay. I'm happy about that because I'm a euro dollar bull. What else is there to say? This fork still working since April. So why change a winning system? We got some sliding parallels here from the from a trend line that caught the highs pretty nicely. And if you just move them down, look where we are. We had 3-4 touches here. We only had 2 touches here, but stopped right where it had to, right?
Yeah.
11. Oh, yes, sorry. Go ahead.
Yeah, I just had a question here. I'm just worried about the euro dollar since the gap that was created at the election time, and it's been moving sideways for the past, let's say, a week or so. What's your view about this gap?
That's a good question. I mean, there's breakaway gaps and runaway gaps. A gap doesn't have to be closed. If we go to a daily, we might as well go close the gap that was left. Let me see. Where was it? Or maybe it's on a. Well, it's not very good to see, but there's a gap here that wasn't closed, and that's 132. So I'm just saying gaps don't need to be closed. And here's another gap, 119.75 approximately. So, of course I worry about it too, especially since other pairs have closed the gaps. But I can't trade like that. I have to look at price, how price moves, and we're still in an uptrend. We're pretty close to breaking. Well, not for me, but for everybody else on Twitter, it's like, okay, this is bull bear line. If we break this, we're gonna fall and close the gap. There's still the lower parallel, and there's still this sliding parallel, which I will quickly put in red because that for me would be like, oh, okay, no more long positions, right? It's how shall I say it? It's a combination of levels that haven't been broken yet. So like 1075 is pretty important. Hasn't been broken. So as long as that hasn't been broken, I have to look upside. Also, of course, the Fed raised rates, a 0.25 percentage point, but it was all priced in. we had a bit of a reaction, but you got to also think we came from overbought. I'm sorry. And of course, this crazy move is, yeah, that was weird. But at a certain point, if too many people are along, price will go down, and until that, everybody gets short, and then price will go up. That's how the market works. But in general, if you look at hourly and 4 hours and daily charts, we're still in an uptrend since the beginning of the year. So why change your mind, every 5 seconds? That's just gonna chop you out. Well, like on this daily chart, this 127, so the low 111s, that was perfect support here in May, and it was support again here towards the end of June, where we are now. So just have to believe first in the levels, then in the uptrend, and then in the forks, and then what we're trying to do is to figure out, can Andy find a fractal that corresponds with my thinking, or if he finds one, where do I see, do I have to start putting in a bearish fork? I haven't had a reason yet, and except I always look at all the other pairs too. There's either a little bit of a correlation or an inverse correlation, and if everything matches, until then I have to stay bullish euro dollar. I hope that explains it a bit. There's not really an exact science, and there's no exact science about filling gaps either. Of course, we are here, trading between in this range for the last 8 weeks or something, since May. Well, 4 weeks, let's say. And there's no news this week, so that's why we've been going up and down and up and down, because there's nothing. Maybe the RBNZ will give some volatility on the commodity pairs and the crosses, but the impact on the majors will be, not much. And same thing with the pound, which I will go to quickly. It's the same thing. Everybody bearish the pound, and obviously, everything that happened with the attacks, and that has an influence. But same thing. Still in an uptrend, and still, that this wasn't a gap. This was, I can't remember what this was. That was when May said they were going to have elections, I think, that we were going to test this. Actually, I should have known that. A move like this usually always gets retraced. It's actually more reliable, in my opinion, than a gap. I just first of all, I don't like trading the pound, but I should have seen the pattern. It's the same thing here, right? This move really strong, keeps going up, but we basically retraced it almost. And yeah, obviously this was a gap, but that's something else. So in short, and I drew this. I'll keep calling it red zone. Or maybe I'll trademark it. Yeah, this is where the pound was supposed to find support, and well, up until now it did. Yeah, it's price action. Looking how other pairs are moving. Let's look at the dollar yen quickly, which I think is still going to come off a little bit more, which would be in line with, the DXY still going down, dollar losing a bit more strength, euro dollar going up. Aussie dollar has a meeting with, well, let me just say, I mean, these sliding parallels, those are you have to look at it, because look, a resistance here, support. If it goes down, it goes back to the sliding parallel for resistance, goes through it, it goes to the next sliding parallel, obviously, and then comes back and tests it. So if it's going to test it for a third time again, well, then we're going up. Now, when a fib level is so close, I can maybe see it going 111, 110.90, spike down and then up. But on the other hand, I could be wrong too, and we're still going down here, because that's also, from the past levels, a very important level. It was resistance here, support here, was a test. So this would be the red zone, so to speak. If I can, I'll just draw it. See, what I do is I I talk to myself, not in a crazy way, but I think in, okay, what is price doing? How is it in relationship to previous price levels? And that's where I try to look for support and resistance. So I'll just maybe just make it a little bit higher, like this. So this is the red zone.
I do the same thing, Mark. Every day I wake up in the morning and I start talking to myself. Is it going this way? Is it going that way?
Yeah.
What's the trend line?
Well, and that is in my opinion what you have to do, because it all has to match. I mean, you can't say yeah, the euro dollar is going to fall off the face of the earth, and the dollar is not going to go up. That doesn't match up, right? So everything, and of course there are correlations that stop working for a while, like right now, dollar CAD with oil, totally the opposite. So now we should almost be afraid if oil starts going up, then the dollar CAD will start going up. Yeah. I'm glad I'm not the only one that talks to himself that way. Oh, yeah. Anyway, yeah, what was I going to show? Yeah, the Aussie. I was talking about 76.76, which I said this in the video too. It's like it's gonna attract, for sure, in my opinion. I didn't really expect it to go this low, but then, you look at this sliding parallel again, look where we stopped. I mean, I just drew it, but I would have, what I would have drawn is this. If you saw the old educational video that I made about pitchforks, normally I already put these sliding parallels the moment that I'm defining a fork, not on not on an hourly chart, because that doesn't really make sense, because that can change. You know, an hourly fork can, if it works for 3 weeks, then that's already amazing. But if you create a new fork and you see the lows here, so this was a low, I make a sliding parallel here to the median line. I should have made one here, but that's too close to the median line. But it would have also, you know, helped me in catching these lows, for instance, if I would have done it. You know, look at how that matches up. It's just, you know, when price is in between in a white zone, there's no fib or trend line, you can't do anything there. You can't enter, and you shouldn't exit the position. I have to have a line for me. And yeah, some people say, you know, oh yeah, if you draw enough lines, then at a certain point you will be right. But yeah, my experience is I like them on my chart. I don't pay the same attention to every line. I know which ones are important, just like this one is important, right? So yeah, 76. I think we're still going there, and then come off. Now I was hoping that but it's a stretch for today before our RBNZ. You can forget it. You know, I mean, it's not going to move that high so fast. So RBNZ will be interesting as always. And Kiwi has absolutely been a bitch.
Volatile, yeah.
It just keeps staying up here. But then again, it's normal. It's everybody's waiting for RBNZ, and you know, it's basically a little triangle. That's the let me just draw it from here. Well, you can see it. You know, I mean, price is waiting for RBNZ, and it's like right in the middle of this range. So either we go up or we go down. I'm thinking down, but that's just me.
Yeah, I agree with you on that. I don't see a reason why they should raise the rates, especially after this their soft data that was released.
Yeah, they want it down, so I don't know.
Yeah,
but the is the market, you know. I mean, it. And then I also think, you know, but Andy just posted his here, the Aussie dollar, the Aussie Kiwi. I mean, and then I'm thinking, yeah, it's been matching up really nicely, you know. I mean, but then he still thinks it's still going down. So is that going to be Aussie weakness, or is that going to be Kiwi strength? Or are they both going to go down, and the Kiwi is going to go down more than the Aussie? Because it doesn't mean, you know, with a cross that the corresponding majors against the dollar have to move in opposite directions. They can move in the same direction, just not the one is weaker than the other. So I pay attention to everything, and this is all part of my conversations with myself. Yeah, and I think everybody needs to do that, but I don't want to sound too crazy. What I was putting emphasis on yesterday is the Euro Kiwi. So this all ties in with, yeah, let's wait till it updates here, the chart. It's probably because I'm talking and taking too much bandwidth here. This all ties in with obviously a nice support level here on a 4-hour. Let me show 4-hour too, because I'm really focusing now on this Kiwi. So let me just say what I was saying yesterday about the 7X. Tested twice, rejected, and here's a trend line. I don't usually draw trend lines, but yeah, this was just too obvious. So we tested it twice already in the last 3-4 candles. This is itching to break out, and if it wasn't RBNZ, I would be, betting half the house on it, but can't do that now. But that would really, with euro dollar going up more and RBNZ talk the Kiwi down, well, then this is going to shoot up, right? And yeah, my longer term view on euro NZD is still a lot higher. So 162, 165, which is that's 1,000 pips from here. And we had support at the 55 weekly this week. There's so many things that are lining up. But usually if it's too good to be true, then it doesn't happen. But yeah, that's and the same thing with euro yen. I'm a yen bear. I really think that Japan is coming out of a decade of deflation, and they've been wanting the yen to be weaker, and they will do it. So this is also actually even on this hourly, I like this chart. It's a weird fork, but the median line, works, and the parallels are working. So kind of like this long too. Let me see if I got anything on daily. Oh yeah, the daily. This channel. Well, it's it's not really a channel, but it seems to be working, right? Those purple ones was support here. So the next that's going to be too steep, but we could be getting, if this is resistance approximately, this zone 127s, we could get there, and that's 300 pips. Of course, don't like RSI, but it's still above 50. Anyway, the euro yen is it was very easy to trade, as you can see here. All you have to do was sell the upper parallel again and again and again and again and again. And now, yeah, I'm trying to find the same structure that can be useful over months or even years. And it could be something like this, actually. But yeah, okay, it's sometimes very difficult to draw it with the magnet mode. I mean, this could be the fork that brings this to 145, maybe. I don't know. See, if there's not confirmation from an upper or a lower parallel, you're basically in the dark still. To keep it as a longer term fork. Let's quickly look at oil. I don't know if you have questions or any particular pairs that you're following.
Yeah, yes, please. I'm just waiting until you finish the forks that you made ready, but I would like to have a quick look on the USD CAD.
Yeah.
And the Swiss franc.
And the Swiss franc against the dollar?
Yeah, USD.
Okay. Right. So for the dollar CAD, wait, let's go from a daily. Whoops. So we're at 33. The former 38.2 is 33.12, and that's also a daily reversal level from April. So that could provide some resistance here, which I'm favoring, still favoring a break of this red zone, which has been really nice, right? Over the last, I don't know, year. So I'm still looking down, and then let's move to a 4-hour chart. And that's where it becomes a little bit more interesting. Let me zoom out. So we still have that 38.2 I was talking about. Let's make the view like this. And that's why I was saying last night too. It's like, okay, 33.15, so to speak, would be a horizontal resistance level. We're sadly enough, because I like RSI trend lines, and of course the 4-hour candle is not closed yet, but we're peeking over it. So either we when does the next candle close? In 2.5 hours. So nothing has been, decided yet for this candle. RSI only gets recorded at the end of the period, which is in 2.5 hours. So I'm still expecting it to go down, and that my RSI trend line stays intact. Otherwise, let me zoom out a little bit. Then, obviously, yeah, upper parallel, 33.75 to, and then this low here from May. So 33.70, 33.85 could be a resistance level. I hope we're not going there, because that would mess up my whole other stories in my head. So, but on the other hand, USD CAD has been doing what it wants anyway. Oh yeah, the neighbors are renovating, so they might make a little bit of noise. I don't know if you can hear it.
Yeah, I can hear it.
Yeah, I'm sitting outside, so yeah. And then yeah, looking at an hourly.
CAD is just doing what it wants. It has absolutely no correlation with the US dollars. And you mentioned something
And
about
oil.
the correlation with the
Oh, wait, I'm gonna have to turn up the volume. Can you repeat what you said, please?
Oh yeah. I was saying you've mentioned something earlier about the correlation with the oil.
Yeah. Well, it's not there anymore.
I thought so.
Yeah. And then here in hourly, you know, 33.15, what I mentioned earlier. But if you look at a more interesting horizontal level, I've drawn this one. It's a little bit higher. It's 33.21 or something, and that would also, you know, intersect with this sliding parallel from this high. So that's why I put my little circle here. If it gets here, it's probably worth trying a short or adding to a short. And yeah, it still looks short. There's no ifs or buts about it. It still looks short. And
Okay.
then yeah, let's do the same thing. I don't trade the anything with Swiss in it. I just look at it as a reference. So see, I haven't looked at it, but I mean, it still looks short. It trend is down, and there's nothing that, unless we go above 98.50, trend is down. So short positions against 98.50 on a daily here. Yeah, still think going down. Could go even like this, because the dollar, it's been worth too much. It doesn't compute in my head with how strong it has gotten. But it's all central bank interventions, and I don't think anybody, even with a master's in economics, understands what's going on. But that's just my point of view. We look at a four-hour chart. Oops. So this is, you know, 97.71. That could be the level to look at, as long as we are under there. Look down, and on an hourly, yeah, that's a mess. I have no idea what I have to relook at it. You know, this was a really nice fork, and I thought, yes, here. But then we went through it, and then actually I thought it would go up here, but then we just crashed. But Tamara, you know, I mean, and especially if you tell me that you're following specific pairs, you can always go here, and every time, let me show you with the dollar Swiss, for instance. If you're following that and you're trading it, so see, my last update on the hourly here was May 14th, right? So if I update, well, this is a bad example. I don't want to do that because it's not nice. But the 4-hour chart, right? May 25th. Now I go to the 4-hour chart, and I'll position it a little bit so that it looks the way I want it to look. Well, like this. So I'll just save it. Save image as on my computer. 4 hours. Dollars Swiss, 4 hours, save, yes. And if we go back to the website now, and I'll wait 2 more seconds, and I refresh the page. And now the 4-hour chart is updated like 2 seconds ago, right? So if you tell me specific pairs that you follow, then I'll make sure that I update them more often.
Sure.
Or when you want it to be updated, just, you know, shoot me a quick DM or tell me on Twitter, hey, this pair, could you update, please? And then, you know, usually I'll do it right away if I'm in front of my computer, or at least within a couple of hours.
Sure.
All right. Okay. Yeah, I don't really have anything else.
All right, that's great. Thank you, Mark.
Yeah. Okay. Well, you know, be safe trading, and let's hope the stories in our heads come true, right?
Yeah.
Okay. All right.
All right.
Then I'm gonna close this webinar too, and I'm gonna post it, and then everybody that wasn't present were wrong, and you were right, Tamer. Have a great day.
Thank you. You too, Mark.
Bye.
Bye-bye.